U.S. futures are higher this morning after yesterday's record-breaking close. S&P 500 futures are up 0.24%, Nasdaq up 0.27%, Dow futures up 0.21%, and the Russell 2000 futures are up 0.19%. The 10-year Treasury yield is down 3 basis points to 4.25%. Oil is down 0.76% at $62.69. Gold is steady and the dollar is softer against the euro and the pound. Asia closed strong. Japan's Nikkei rose 1.3% to a new record high as manufacturing sentiment improved and wholesale inflation eased. The Hang Seng jumped 2.58% on strength in tech and internet names after Beijing announced loan subsidy programs to boost consumption. Mainland China added nearly 0.5%, while South Korea, Taiwan, and Southeast Asia also gained. Australia lagged on softer bank earnings, and the Bank of Thailand cut rates by 25 basis points. Europe is also in the green. London's FTSE is up 0.16%, Germany's DAX up 0.77%, and France's CAC 40 up 0.39%. German and Spanish CPI readings were unchanged from earlier estimates. In the UK, fiscal speculation is building ahead of the autumn budget, with talk of potential inheritance tax changes. Today's data includes weekly MBA mortgage applications at 7 a.m. Eastern and DOE crude inventories at 10:30. Richmond Fed President Thomas Barkin, Chicago Austin Goolsbee, and Atlanta Fed President Bostic are scheduled to speak today. From a broader strategy lens, guidance remains favorable on the U.S. large and mid-cap equities with more selective positioning internationally. Intermediate-term taxable fixed income remains a preferred spot for income and potential price appreciation if the Fed cuts. Commodities are neutral overall, with energy exposure reduced and industrial metals favored on improving supply-demand trends. When markets are making new highs, it can be very tempting to think about taking profits and trying to wait for a better entry. But research shows that is a very unprofitable way to invest, that missing just a handful of these markets' best days can drastically reduce your long-term returns. The best and worst days often happen close together, meaning that trying to time them risks missing the recovery after a pullback. Staying invested through the cycle while rebalancing to keep allocations aligned is usually more effective, more profitable than jumping in and out. Use market strength to check your positioning, trim where you're overweight, and add to areas where you're under target. But resist the urge to make wholesale moves based on short-term predictions. Stay disciplined, stay focused, stay profitable. I'll see you at the close to go over what actually happened. God bless.